I looked at the situation. All outcomes for me were, now it rarely happens. Let's say I'm right, deflation is persistent, the economy is worse than expected, we don't get rid of this whole economic mess until, let's say, Q3 next year. Okay, so the answer to deflation and slow economy is printing of money and more fiscal stimulus. Okay, let's then push that aside and say, no, Raoul's a total idiot, he's completely wrong, the markets are right, inflation is everything. In an inflationary market, well, Bitcoin and gold do well. So here we've got a smile where the least likely outcome, which is everything just returns back to kind of 1.5%, 2% GDP growth, and we all forget it's just happened. That's not going to happen. Simply not going to happen. Maybe it does, but that's the risk that we all run in the Bitcoin position. So basically, inflation, deflation of any sort, if we look at all the past episodes, whether it was 2008, 2012 in Europe, when Europe almost went under, and then periodically afterwards, the central bank kept stimulating, didn't stop. They're not going to stop here. So that to me is a good setup. Okay, so I've now got a good case. So then the case is okay. At that point, I said, right, gold, Bitcoin, those are my main bets. I own some bonds because I'm a deflationist, and I had some dollars and some other trading positions. Okay, fine. So then what changed is the charts. You know, we'd all been looking at it, that the chart of Bitcoin was this beautiful, beautiful wedge pattern, triangle pattern, and it broke. So of course, I'm a macro guy. I can see an opportunity. I can see a great chart. When I see one, I start saying, right, look, we've got to add to this. And, you know, I added obviously into the big sell-off as well, because I saw this pattern emerging. So then it breaks, I start adding. Okay, so now I'm over 50%.
And just real quick, what were you selling initially to move capital? Was there a specific asset, or were you just going across all assets and kind of taking percentage? I was just reducing
trading positions because I just saw that this one had the propensity to make more money than anything else. But then it got to the point where you start looking at the charts, and I started digging into the charts and writing about it in Global Macro Investor, looking at the comparisons of Bitcoin versus all other assets. And I started tweeting about this, and this is before it really started happening. I'm like, look at these charts, Bitcoin is about to eat the world, right? It looks like it's going to become the super black hole of which it's going to outperform every single asset class on earth. I've never seen this before. Literally, I've never seen it. You know, we've seen gold might be dominant, but you might have bought copper instead, blah, blah, blah. There's nothing, not even most of the Amazon and stuff like that looks like it's going to outperform Bitcoin. So that's when I start saying, okay, this is the time to really go for it, because it's a waste of capital to put it into anything else. Now, I'm not coming at this with the philosophy, you know, the Bitcoinization of the world or anything else. I'm coming at here as a macro guy, saying I've never seen a more dominant opportunity in my entire lifetime. And if that is the case, it's time to really back your bet. You know, and it was a very exciting industry, because back in the day, these firms could have 15%, 20% volatility and had huge bets. So you'd get to hear famous people like, well, famous in our world, Nick Raditi, who was actually the big swinging dick at Soros. He lived above a store in Hampstead High Street in London, completely below the radar screen. But he was the most aggressive risk taker I've ever seen in the industry. Even Stan Druckenmiller says, you know, I think Nick killed Stan on returns, but his volatility was enormous. The size of the risk this older, very quiet guy would take was astonishing. So anyway, so that macro world had high risk taking and high returns. In came the pension funds, in came the insurance companies, in came the sovereign wealth funds. And they said, well, we don't want you to be so risky. And they're like, yeah, but you're not going to get the returns. They're like, well, we don't really care. So they crushed volatility down to 5%. Comes the rise of Millennium and all of these big platform plays where they have lots of traders, low volatility, much lower returns. You know, 10% is a great year. And so what happens is these macro guys start either turning into family offices. Lewis Bacon from More Capital, George Soros was first, Julian Robertson, I mean, they all did. Because they're like, fuck that. You know, I want to make money the old-fashioned way, which is not by having assets, it's by taking bets. These guys are the great speculators. And then some of those guys went, this Bitcoin thing's interesting. Now, most didn't get it in the beginning, they saw it as a trade. And then everybody saw it, started to see it. Oh my God, there's a parallel universe coming, and it's all going to generate alpha because there's no capital and not enough knowledge in the space, because everybody in it was a technologist and none of these macro guys were in it yet. So the macro guys went, here's an opportunity for us. And one by one, they all started going, have you seen this? If you ask Mark Yusko, if you ask Dan Tapiero, they will say that they really got into this at a global macro investor roundtable of mine. I think it was either in Cayman or in Spain, where one of the other global macro guys, another ex-Goldman hedge fund guy, says, by the way, I started a Bitcoin exchange and you need to find out about Bitcoin. This was 2012. And when we started learning about it from them, and that network then starts talking about it. So we all kind of got polluted at the same time by similar people. It is a network. And that pollution is, so cut to, I get a phone call on Sunday, again, I can't mention him. It's one of the most famous hedge fund guys in the world, and one of the greatest traders I've ever seen. And he really made his money in money markets. He's a rates trader, right? He's a world with no interest rates. So, and I've been bugging him about this. I mean, he's been in crypto for a long time. He knows it. But I was bugging him like, there's only one trade that matters. And the conversation on Sunday is, yeah, there's only one trade that matters. So,
and so when somebody like that, who's got world-class experience, access to enormous amounts of capital, I'll just kind of call it brass balls in terms of the experience of taking big bets with big volatility, what do they do when it clicks? Do they go, let's go 90% into a position, or they kind of have their hands tied because of who their LPs are, the fund size, the position sizes, and so they may only be able to get 10 or 20% exposure, and then they've got to figure out what to do with the other 80% of the bucket of capital?
Firstly, he's a multi-billionaire.
That helps.
He doesn't need to become worth 100 billion. It's not relevant really. So it's the game now, right? It's the game plus making sure that his capital grows a reasonable amount without blowing up, right? That's the game. Once you've made your billion, you don't want to lose it. So yes, so he exactly as you said, he's in a slightly unusual situation. I can't reveal why, because everyone will know who he is then. But to take an irresponsibly large bet within the fund, not easy to do for the LPs and everything else and the other reasons. But in his personal wealth and parts of the portfolio, you allocate to VC, you allocate to crypto itself, you allocate to other opportunities, you just get involved in the space. And, a lot of people like John Burbank, they did the same thing, get involved in the space. You guys did the same thing. It's basically the same bet. It's layer on that bet in a number of different ways. And then let's see where that goes.